This week's pick of the week is something that we've
Hmm.
discussed a few times, and that's the financial sector, and that's XLF.
Hmm.
What are you looking to do here,
Well, we
AJ?
actually featured this 2 weeks ago. This was my pick of the week 2 weeks ago. I'm revisiting it because 2 weeks ago we were waiting for a signal. We got our signal. This is an end of day signal, everybody. That means you get the signal after the market's closed, and then you try to trade the signal on the subsequent days. And we just didn't get the follow through on the two subsequent days to get the trade to fill before we got a negate to that signal. But we did get the signal again just on a Tuesday of this week. So again, end of day signal. So Tuesday evening after the market closed, we got that signal. And guess what? Wednesday, we got clear indication to go ahead and short either the XLF stock or buy a back month deep in the money, far out in time. And I think that we were actually looking at the September option. Let me just verify. Yeah, the September 20th, 2024 option is the one that we wound up going with and shorting that guy in order to set up our trade. Now the scoop is we've actually had a couple stall days since then, but I think we're still good to go. But for anybody who missed that trade, you still have that opportunity. So if you're dealing with a margin account, you could definitely short some XLF. If you're dealing with a cash account, you might consider buying that deep in the money, far out in time put option. That's going to act as a what we call a option trading at parity. So it's a substitute for shorting the stock. They move dollar for dollar opposite each other. So if XLF drops a dollar, that put option goes up a dollar. So it acts just like this. And that's a great substitute because then we're set up for wherever we find the next reversal up to sell put premium and buy our protective calls and start creating an income position. We actually featured this one on our program last night, our workshop with our program participants. Usually I don't like to share that with the general public, but we talked about this 2 weeks ago, and I just want to let people know that the signal was found on Wednesday, and it still looks like there might be some opportunities for us to think about this. If you're new to this, paper trade it, simulate it, see if I'm right with how we like to proceed with these XLF, and then get into the move of going forward on this. So this is where we're at with XLF.
And just a quick follow-up question. If you were, or if you did, or if someone on in the community did take that position, what's the time frame that you're looking at to potentially make an exit?
Well, the last time that we got some signals, let's look at this one. About 1 week, 2 weeks, 3 weeks, 4 weeks. Over here, we're talking about 1 week, 2 weeks, just 2.5 weeks. And I wouldn't be exiting per se. Instead, what I would be doing is selling put premium. So in this case, selling the front month near term at the money put, and that's going to generate an instant dividend. That's going to generate some instant income for us. And I like to use that instant income to help offset the price of a protective call, which will then also profit for me as well as offer me protection. So, that's kind of my next move. My next move is to sell premium, buy protection. And this is going to create this cycle. My idea, SIP, and this is a little bit different than a lot of folks think about, is instead of trying to have winners and losers, I'm letting the fact that options profit over time, right? Especially if you sell those options. And so what I want to do is I want to stay in this position as long as I can. Number one, because I know at a certain point, my position will appreciate enough. I will have collected enough, instant dividends and rollouts from the protective option to have brought my break even price below my protection price, below my stop loss order, below my protective option strike price. And so that means that was a lot of word salad, I know, but that means that my trade very early in its life cycle becomes risk free. It means that even if the position goes against the direction that I've traded, I'm still going to make money, right? Because my insurance, my stop loss order gets me out at a profit. So that's my goal, is to stay number one in the position long enough for it to be risk free, which usually means about 3 to 5 weeks, right? And then after that, who cares where the stock goes? Because either way, whether it goes in the direction I expected it to or against me, I'm still going to win, right? I'm still going to. So people are always like, well, what's your win loss ratio? Well, so long as my position lasts past the first cycle, that's all winners. So the key is to just get past that first cycle. So that's my goal. My goal is, number one, to get to the point where the trade is risk free. But number two, the longer I stay in the same positions, making these monthly adjustments to the position, adding a position here, taking a trade here, adding, taking away, the longer I can stay in that initial position, my profits for the position, instead of going up linearly like most trades do, they go up exponentially. So if I can stay in there 5, 6, 7, 8 months, I mean, I could be doubling my money in as little as 5, 6, 7, 8 months, right? That's unheard of in these type of investments where you do these little monthly positions, right? They're very effortless, and yet the payback is often. So my goal, number one, get a risk-free trade as quickly as possible. Number two, have it last as long as possible so I can get those exponential gains.